Good day, everybody. Still here, Daily Market Pulse. It's Tuesday, June 24, 2014. So stocks give up the gains that we had recently, and it did so in higher volume. So distribution days have been added. So we're at 3 and 2, S&P, NASDAQ, respectively. And this is kind of what it looks like here. You see the big drop into the 20-day moving average back toward a support area. So the selling accelerated a little bit more here at the end of the close. So you see the resistance at the top as well. I'll put a line across there. And I want to make that red instead. And then I'll make it a little thicker. And yep, like that. So there's the resistance area right there. And I drop it down just a hint. Right there. So there's your resistance. Boom, boom. Doji's kind of hanging man kind of formation yesterday, and then boom, back to the 20. Dip would be from here down to just slightly lower level here, this last pivot area that we had at 16.7 and a quarter, 16.725 or so. I would expect that to be support. It could be lower, it could be the 50, but I'd expect it more here than anywhere else. Of course, you can see the channel, top of the channel was kind of struck. If that's an accurate channel still, that was channel, that's pivot area, so there's the fade. Then you'd have a small box formation if it holds and bounces. Everything still looks very bullish though overall. The distribution account obviously very, very low yet, and nothing really threatening as per se just yet to go much, much lower. So far so good. There's the doji on the S&P yesterday, and then the drop today. Doji's at new highs. Like that are certainly a red flag. They're a cautionary tail. So you check that out. There's back to the 8 moving average, now looking maybe for the 20, but also back down toward 1920, 1925-ish, just like we said on the Dow. It is overbought once again. So we flip over the NASDAQ. The NASDAQ had something similar as well. So it had spinning top, or almost like a hanging man, and then a doji yesterday. It went racing higher into the upper Bollinger Band and faded. So there's the resistance for the 3 prior days, and then faded lower into the 8 moving averages. Immediate support right here, right now at 43.50. Below that, down to about 4,300. Those are still possibilities as well. We're still looking for a bullish breakout above. Everything still looks on the bullish side for now. TSX had been kind of grinding higher and then went sideways. Almost like 3 consecutive doji formations going into this thing. Well, now we lost the red candle. You see there was a drop on the red candle today. You just saw that a second ago, and then now we're looking at probably back down toward the 20-day moving average here as well. Look at how long it's been overbought. So it's due for a pullback of some sort. We'll see what it does. Following these multiple doji formations, the U.S. dollar, Canadian dollar had broken support near 108.50. And then now bullish piercing today, or pardon me, is that today? Yeah, that's today, in a very oversold state. Not sure this is enough, but 107 was the target. It got pretty much to that point today, so that might be it for that. It may have a retest of that area again. Watch out for that. Euro US continues to grind right along the 20 and looking to threaten to go higher. So still looking for higher levels here as well. The market's down. Then we figure the treasuries will probably pop. They have not surpassed the recent highs. But they're now into 136, 135 to 136 was the range we currently were in, with a rising 50 and slightly declining to flat 20. It was kind of stuck in that range for a couple of weeks, almost 3.5. Room to 137. Thereafter, we'll have to reevaluate. The markets drop a little further like we think, then that could pop into 137. Then we'll see bounces and then reversals here as well. Oops, I don't want that. I want the Japanese yen next. Japanese yen also holding the 20 and the 50 and the moving average as well. Still looking for a bullish run back into 99. Gold, after the big run, is just simply consolidating sideways. There's been a big push last Wednesday. Thursday, I'm sorry, yeah, it was Thursday. Friday, and then Monday, sideways. Today, again, even further, a new high formed, but still got 1335 for a target. Still looks very bullish there. And silver, same thing. Almost looks stronger, but certainly looking for higher levels, like 22 in particular is the next target in mind. Crude, after gapping up yesterday, forming a dark cloud cover at the doji highway formations from mid-June, came back down, made a new low today relative to the last two previous sessions, and we're still kind of looking now for the 105 to 104.50 target area on the downside. We'll see if that's actually going to materialize or not. Or are they done with that lower shadow today? Did the buyers actually truly step in? Small caps, since it's risk on, it came in looking a lot like right now possible falling off the roof where it came up and over polarity 118 and now coming back down toward the 8 and below the 8 and looking for support at 116. That'd be a logical place for support because that'll also coincide with the 20-day moving average. So again, prices go down here, then it means treasuries probably go up a little bit, and then it means the VIX probably starts to show signs of a pop, which is what we're looking at next. VIX definitely popped today. After a couple of days of green and a gap higher yesterday, they decided to take it back up through 12, and target at this point would be 13. Treasuries slightly higher to 137, VIX into 13. The S&P slightly lower, Dow lower, NASDAQ a little bit lower, small caps a little bit lower. That's kind of what we'd be looking for going to the next day or so. Okay.